Thank you so much for joining. This is our Wealth and Wisdom series for Andersen in Canada. We have some special guests and some great friends. Thank you all for joining. Shondell Sabat, our Director of Enterprise Advisory, will be making the official introduction.
Thank you, Catherine, and welcome everybody. I'm glad to see everybody here today. Great crowd and some really good networking. As Catherine said, I'm Shondell Sabat, and I am a Director for Enterprise Advisory at Andersen, where I wear many different hats, primarily in family office advisory and soon to be sustainability. So welcome. It is my absolute pleasure to introduce to you Fred Mannix, and he's brought a special guest with him as well. And, you know, just a little bit about Fred's background. He's a born and raised Calgarian, but he really does have a global reach and a very unique perspective on building trust. And I think that's what he's going to talk about today, although we're going to leave it up to him and his guest to discuss that. Just getting to know Fred a little bit, his journey is very unique, I think, to say the least. He spent a lot of time as a professional polo player where he represented Canada at the highest level. And I just wanted to mention that one of the highlights of his polo career was that he was captain for the Commonwealth team in 2017 at the Coronation Cup. So I think if I draw any correlation to that, it would be like, I think, playing in the Stanley Cup finals. That's the way I took it anyways. And he's transitioned that into working in alternative assets. And that's what he's here to talk about today. So from my perspective, I think Fred brings a very rare breed of discipline, hard work, strategy, and clearly long-term vision. And we're going to hear about that today. In 2019, he joined Calgary-based Accelerate Financial Technologies, where he now leads the Standard Wealth Strategy. He guides high net worth families, entrepreneurs, and institutions through the complexities of generational wealth creation. Now, today, Fred's going to share insights from his own evolution, what it takes to build an investment firm from the ground up, and why trust is one of the most important assets that you can earn, and how his team continues to redefine modern wealth stewardship. And joining Fred today is a good friend of his, Richie Fung. And Richie is the co-founder at Xperia Information Technology. So he's going to bring some added depth to the conversation. So enough about me talking about Fred and Richie. Let's welcome them to the stage. So Fred, welcome.
Well, thank you very much for having me. I feel honored to speak in front of everyone this morning. I know everyone has a busy schedule, so thanks for spending it here. And Catherine and Shondell, thanks for providing the opportunity to do so. I am born and raised here in Calgary, so there are some familiar faces here, but I have traveled the world as well through my polo endeavors. And I learned a lot on those travels. I obviously experienced not going to lie, polo is for the wealthy individuals of the world, and I met a lot of type A personalities that were very successful in their business endeavors. When I first started getting going, I was just a young boy, wanted to be like my father, and he had access to the horses and the professionals and the facilities, and so I utilized that access. I was the youngest in my peer group, and being determined and being well coached by strong mentorship early on, I quickly surpassed my peers. And when I went off to university in Florida, there was a gentleman there, Mr. Tom Oxley, a famous polo player. He had recently just made a large grant to Florida Atlantic University. And through his guidance, I was able to enter FAU in 2002 and start my university degree there in Florida. And at the same time, by luck, thanks to some great planning, the US Open was also being played at Royal Palm Polo, which is only like 5 kilometers away. So school at night, polo during the day, and I ended up playing with some champions over the years in Florida. I still Actually, I'm playing in the Florida season there. It's if you haven't heard of it, it's called Wellington, and it's directly west of West Palm Beach. It's the horse capital of the world in the winter. So that's where all the people who love polo descend from the East Coast. A lot of hunter jumpers and dressage as well. Now, polo, it's a pro-am game. You don't often hear of it often, and the reason is because of the amateur on the field. It'd be like Michael Jordan playing golf. We know he's a champion basketball player, but golfer, middle of the road at best. So you, without going too far into how the polo game works, you get a wide range of people that you're working with, and the amateur on the team hires the other pros, and you go out and you compete in different competitions. Now, as you play at the higher levels, like in the Gold Cup in England, it's the highest level outside of Argentina, you get some very determined amateurs that want to win. And that's where wealth management, I came to a crossroads. I was actually playing in the Gold Cup in 2017 with a team called Talendrakis, and the patron, so the owner of the team, Mr. Eduardo Carmignac. He was about, say, 70 at the time. I knew it was going to be soon winding up his career. I saw he was having a great season. He was having a lot of fun. We were being successful. And he said, unfortunately, gentlemen, I'm not going to be able to play the quarterfinals of the Gold Cup. And that caught our attention because we were there playing for him. He said, I'm the chairman of Carmignac Investments, and our AGM just happens to be on the same day that we're scheduled to play the quarterfinals, and I have to be in Paris. Okay. We ended up winning, and when he came back, I said, tell me about that. And he said, well, unfortunately, if I don't fulfill my duties within my business, I'm going to let a lot of people down. And I did let you guys down not being there for the quarterfinals, but luckily you guys continued on. So I shared with him that I'd been managing my own family capital, and I said, Mr. Carmignac, I really admire, what you've built. At the time, he was managing 70 billion euros in assets under management, and he was having a great summer of playing polo. So understanding, the business that he built and the risks that he took early on, I asked him, what would you recommend for me? Because I can see that eventually I will not be playing professional polo, but I do enjoy capital markets. And he gave me 2 pieces of very good advice, like every mentor does. He said, to be honest, you're too old to go work at a big bank. That's going to be a tough sled for you. And you need to get some accreditation because people know you only as a polo player. So picked up the books, got my CIM, which allows you to trade other people's capital on a discretionary basis. And I put the search out for alternative asset managers here in Canada. And alternative because my strategy utilizes leverage. And we were able to go through a great search firm and identify a gentleman, Julian Klimachko, here in Calgary, who had just founded Accelerate, and with the mission to make alternative investments easy to access. So when you think about alternative investments, the stigma is, high cost, opaque, hard to access, only for accredited investors, and complex and risky. So we are on an education path to really change the perceptions around alternatives. And with a regulatory change from the Ontario Commission in 2019, alternatives became a lot more accessible. You've probably seen that in some of the literature over the past few years. A lot more people are open to allocating towards alternative strategies simply because the access point has improved. Without going too far into it, the access point traditionally has been through subscription agreements, and it's a stack of paper that's hard to work through. Now today, exchange traded funds, so ETFs, you can get the same institutional quality strategies through an ETF. And through the tax treatment, which we can all appreciate, being hosted here from Andersen's, ETFs are just more tax efficient than the traditional mutual fund wrapper. If you looked at assets under management in the last 5 years, mutual funds have had a steady decline, ETFs have had a steady rise. And so like any business, you want to have a tailwind behind you. So that's really the first tailwind we have. The second tailwind has been alternatives really have had a place in institutional portfolios for a long time. Specifically the Yale endowment model. They really revolutionized how institutions like endowments or pensions have been allocating. And you're seeing the general retail public become more allocated to alternatives through groups like the Panorama Advisory Group. We have Chantel here from Scotia, and they have an allocation towards alternatives. So plenty of you here in this room, whether you know it or not, probably already have some alternatives in your portfolio. So joined Accelerate and in 2019, and then the world changed in 2022, and we had to put our thinking caps on. Our business is really predicated on a layer cake. First, do you know who we are? Do you like what we do? Do you understand what we do? Do you trust us to not let you down? And so it's been a long path, not an easy start. 93% of the assets here in Canada are owned by the big banks. So as an independent, you got to be with your elbows up in the corners. And, we don't have the brand recognition that, a Blackstone would have. It's easy for allocators to go and allocate to Blackstone. And we live in 2025, so somewhat litigious society. We're not going to be able to change that. We just got to adapt. And so the education component that we've brought to the table has been important. We do continuing education credits on, certain alternative strategies. It's not too salesy, but we get out there in the community and try and, bang the drum for alternatives. And you'll see that from, all the large financial institutions going forward too, because these strategies really are earning their place within all types of portfolios. In March of 2020, we launched Standard Wealth, and that's really that's my passion. That's really where I focus a lot of my energy. Interesting time to start. We were down 19% in the first month, and my team was looking at me like, "Are you sure you know what you're doing here?" I said, "Don't worry, everyone is down 19%, so everybody's worried." But with time, as we know, generally markets bounce back and the strategies performed as expected. I'm having a lot of fun doing it. I found my vocation. I made a great transition. Still playing polo, having a lot of fun doing it. Have friends until the end in that sphere. But my real focus day in and day out is on Standard Wealth and really growing the Accelerate business. I'm a shareholder there, so as owners, I know there's quite a few owners here in this room. You have your eye on the ball 8 days a week, morning, noon, and night, thinking how you can, expand your presence, improve your product offering, increase distribution, and just make the business go better and on whatever metrics you think that you're winning at. I was very fortunate to meet my good friend here, Richie, about the same time. We've been like 2019 or 2018 or so. And Richie, right away, I was drawn to his energy of being a kind, honest, entrepreneurial spirit. I'm not going to tell his story, but we are amongst a golf fanatic. But he has built a business from scratch, and he has quite the story. I'm going to invite Richie up here just to share his story. And we talked about trust at the beginning, and we all have our trusted advisors. And when they provide advice to us, we are more likely than not to listen to those advisors. And Richie and I, our trust was really built around the golf course at the start. And being a businessman, we were able to actually discuss complex ideas and opportunities in a very logical fashion. And luckily, I can say after some of those discussions, when we were raising capital at Accelerate to get going, Richie was one of our first investors. So with that, I will invite Richie up here to say a few words and tell his story and all that he's doing.
All right, I gotta move this mic down a little bit. So before I start, my wife here, she reminded me that I have 2 ears and one mouth, so I should listen more and speak less. So I'm gonna keep this very, very brief, And so Fred here is a good friend of mine, and as many of you know, he's a little bit different than I am, but I have a big heart, and I like to support kids that come from underprivileged families, right? So so that's why I'm here today, But really for my story, I'm really the polar opposite of Fred, you know, like I come from, born and raised Calgarian from the east side of the wrong side of the city, I guess, you know, sorry to those people from the east side. But, you know, my father came here from Hong Kong. He was a businessman. And when he had come to Canada by that time, you know, we had really lost everything and we didn't have anything. And my father was the kind of person that he always worked 3 jobs. My mom always worked 2 jobs. You know, and when my father first came here, one of his first jobs was working at the Sparks Egg Farm on the outside, on the east side of town there. And, you know, it took him a while to get that job. And he was so proud to finally find employment that he wore a 3-piece suit to work the first day, you know, just to clean these chicken coops. And then about a year later, he found another job washing dishes, and it paid him, you know, $3 an hour, which was double what he was getting paid at the egg farm. And that was the first time he took us all out for dinner here in Canada. So when I was growing up, you know, my parents worked really hard, so we always had what we needed, but we didn't have a lot. And so over time, you know, my brother and I, you know, we recognized that, you know, helping our parents, you know, they had bought a restaurant. We would always, you know, clean the kitchens, you know, sweep the floors, that kind of thing. And we actually lived in the basement of that restaurant for 7 years. And when we graduated, my brother and I, he's 2 years older than I am. Unfortunately, during that time, that was during the dot-com crash. And, you know, being Asian guys, you know, I know it's too early in the morning here to talk about math or anything like that, so I won't borrow, or, you know, if to bore you with that. But you know, we finding employment was more difficult. So we just decided we're going to start a company. And I have absolutely no business being in technology because I'm an economist by training. But, you know, we started, we, you know, went around Calgary trying to find our first clients. I opened the yellow pages, started to call people, and you know how that goes, right? So I'm really dating myself. But that's really where I come from. And so over time, through really helping our clients and helping them succeed in our first initial 2, 3, 4, 5 clients, all through referral, that's how our business has grown to what it is today. So, you know, I'm not going to give you too much more detail on it because you're really here to hear from Fred, but that's what I have to tell you.
Yeah, so I feel honored to have Richie as one of our first investors in the parent company of Accelerate. As you know, when you are asking people to bet on you, that carries a lot of responsibility. And I think I have been, we'll call it somewhat successful. We have a long way to go, but last year it was our first cash flow break even year. So that's quite the accomplishment because the statistics here in Canada are about 90% of newly formed investment companies, they fail either through operational breakdowns or bankruptcy. Their business plan, it just takes too long. And as we know, raising capital is difficult because if you're winning, you need more capital to go quicker. If you're stuck in a rut, you need capital to get out of it. And if you're trending towards bankruptcy, you need capital to avoid it. So I learned a few skills that I didn't previously have after the pandemic. And I learned those because we had some wholesalers, that's the term for sales distribution in our field of ETFs. They were in Toronto and they kept on saying, well, we can't generate meetings. Like, you know, nobody's getting together. Like we can't go for a coffee. And I thought, okay, wait a second. I got my time, energy, reputation, and capital at risk in this business. We are going to generate some meetings. So unfortunately, we departed with the team in Toronto that had been helping us there. But before they did, I said, just show me like your critical path process and how you're doing this. And then, you know, some had, you know, a decent strategy to try and attract people into meetings because honestly, no meetings, you're not selling any ETFs. Every single ETF out there is sold, not bought. So I found out what they kind of generally were thinking, and we developed a sales process utilizing basically a triangulation of LinkedIn, emails, phone calls, and it was rough at the start. Imagine no clinical training, no professional training. And we're quantitative in nature. So the makeup of our investment committee is, you know, CFAs, doctors. Like I sit across from a doctor, and he's got a doctorate in mathematical actuarial science. If you have a glass of water in front of you, he will tell you about the positive expected value of drinking that. You will not die. but you have to phrase things in a different way to sometimes get your message across to different people. So I came in and we generated some good conversations, and luckily we started to see the light at the end of the tunnel, and I can tell you, built a lot of skills along the way. I'm just going to quickly walk you through. So our business is really two parts here. We have the ETFs, and then we have the strategy I am overseeing, Standard Wealth. Thank you, Shondell. So Standard Wealth is a bottom-up value investing strategy, and why I like the large cap space is there's a lot of information out there. A lot of information, so at the same time, it should be fairly efficient. And the trick here is to find opportunities in the market, maybe that are overlooked. And I think we've been fairly successful at that. This is just the brief overview. So you got to accelerate the parent company. We have our 5 actively managed ETFs. So as I mentioned, Chantel is here in the front, and her team at Panorama would be, a prime candidate to utilize our ETFs in their books of business. Some of you are clients of Scotia and CIBC and Royal Bank of Canada Admin Security Advisors. We have a digital asset fund. As you know, digital assets are on the rise. Like it or not, it looks like they're sticking around. So we formed that strategy a few years ago. And then you have Standard Wealth. And that's where I'm spending the majority of my time. Just quickly, as I highlighted, 2024 was a pivotal year because if you're cash flow negative, you're trending, as I described, the third and worst option towards bankruptcy. So we think we're on the right path now, and really our business has grown substantially here in the last year, and we're looking to continue that type of growth. We have I don't know it off by heart yet. Yeah, Standard Wealth, we crossed our 5-year track record. And as with any new venture, especially in wealth management, people want to see that you have lasting power and a track record of success. And we have had that. I can say with absolutely all my conviction that we've really accomplished our mission of protecting and growing our family's wealth. The families that we're working with, they entrusted us with initial capital and said, we support you, your thesis makes sense, and the numbers are the numbers, and they've been very good. As I mentioned, the strategy is really predicated on having a good team around us. We complement each other in a lot of ways. There's a lot of things I can't do well that our CEO and portfolio manager does well. And since we're analytical in nature, we're always running all kinds of processes to look at where there might be risks embedded in the portfolio, whether it's concentration risk or sector risk or a dreaded dividend cut. Nobody likes those, but they're usually a very good sign of a business in trouble. And so we're monitoring the companies on a daily basis. And really my passion is really finding out who's winning, who's losing, and why out there in the marketplace. If you understand that, the stock price is sure to follow. This is the performance of the past few years since we got going. Often with outperformance, people perceive a strategy to be risky. But I think in 2022, with the S&P 500 down 18%, the Canadian bond index down 12%, our strategy was down 11% after fees. And one of the unique things about fees is we don't charge one. We don't have a management fee. If we don't make money, there's no fee. So I look at our clients much like partners rather than clients. I have my capital tied up in this strategy. I've seen what it's done for my personal family. And my clients today, I'm very proud to say, it's not a handshake often I'm met with. It's usually a hug. And that's built through the tried and true methods that we're utilizing in fundamental analysis of our portfolio companies. We really know these companies inside and out. And that brings us probably to the most important part of the presentation. How are we doing it? Well, you know these companies. Who knows Dave McKay at Royal Bank of Canada? Have you guys ever heard him speak? Because he speaks extremely well. He's able to transmit confidence in his business, clarity, mission, and a forward-looking statement that won't get him in trouble with the OSC or the ASC. What about Jamie Dimon? A fantastic businessman. He's taken JP Morgan to the absolute top of the pile for financial institutions. A globally systematic, important bank. They have tremendous competitive advantages, and in return, the stock price follows. We really focus our efforts around two key themes in Standard Wealth, and those are going to be through protection through the government, whether it's in the United States or Canada. In Canada, you'll find businesses like our banking system that's protected by the federal government through the issuance of a restricted number of Charter 1 licensed banks. There's only 6. So what does that mean? They can take deposits, they can offer you mortgages, they can offer you investment advice, insurance, the complete gamut. Well, with only 6 competitors in the market, the Canadian banking system has the highest return on invested capital anywhere in the developed world. What does that mean in layman's terms? Banks in Canada are a great investment. They pay a dividend and they have a competitive advantage of no new entrants. The second thing that we look for in the strategy is scale. So you might think, well, the big companies are winning. They have lower cost of capital. They can access debt markets. And that's part of the strategy. But when I think of scale, I think of large capital projects that only make sense if you have a counterparty that actually needs that service. Pipelines fit that bill. And we've seen in Canada, companies like Pembina Pipeline hold a dominant position in the United States. It would be Kinder Morgan. And their business is really predicated on building pipelines with 20-year take or pay contracts and with inflation protected. So even when we had a little bout in inflation here, they managed to weather the storm quite well. And nobody's going to build these expensive capital projects unless they can get those contracts in place first. So it's a very safe and stable business model, as long as management sticks to projects that make sense. We do have a dividend in the strategy. It's 3.6%, and it's not going to light your hair on fire, but as long as these companies, the board of directors, continue to see the companies performing well in the marketplace, we expect them to pay those quarterly dividends. And over time, those dividends have grown. They're usually anywhere from 3 to 5%. The other last important number in the portfolio is really the price to earnings. So how much are we paying for these companies for their future earnings? And we're consistently, as a value investor, looking to pay less than the general market. And that's served us well because it gives us a margin of safety in investing. We read about the high-flying tech stocks, and Richie's my go-to informant in that sector. As he mentioned, an economist by trade. I follow the sector, but I won't be allocating to companies that have bright prospects but are too expensive to buy today. We have a boring value-based strategy here, and I can circulate this presentation after for anyone who would like to see it. I'd say this is really the most important strategy. The last thing that really gives us a competitive advantage is the use of alternatives in this portfolio. So think about when the market is zigging, we want to zag with some of the securities in the portfolio. And a good historical context, a great place historically to think about that is 2022. We had stocks and bonds highly correlated, both trending down. I'm sure a lot of you opened your statements, after first quarter 2023, and you were like, wait a second. I thought the bonds here were supposed to protect me from these drawdown events, but through unique circumstances out of all of our control, they became highly correlated, and it was a very tough year out there. In this portfolio, we have an absolute return strategy. It's about 10% of the net asset value of the strategy. It's an absolute return strategy. It was up 15% in 2022. So think about what that does in your portfolio. As you have an uncorrelated asset trending up and the general market trending down, it can help reduce volatility. It's not going to work all the time, but in that type of environment, it did. Now, the exciting part that I really get jazzed up about. These are 4 charts from this year, since the start of the year, and you're going to know some of these names. I'm going to walk actually over here. You're going to see since December 24, so year to date, this is Cenovus Energy. And where we shine is during periods of volatility. We really haven't bought a single security for the past 18 months until April 7th. That was the Monday after some pretty historical volatility. President Trump, he announced Liberation Day, and you can see the charts all kind of look the same. Big drops at the start of April. And we decided on April 7th that we were going to allocate to these 4 companies. So Novus Energy, why? They have a tremendous competitive advantage, and that it's going to be very difficult to build these facilities going forward. And they have put all the capital costs in place. So their break even going forward is going to be about $45 in WTI. With the weakening Canadian dollar, they got a headwind, a tailwind there, and management is consistently executed. When things came back to more rational market, we've seen the stock price recover. So that's, obviously, we still believed in the business. We didn't think that, oil was going to be going anywhere anytime soon. So we allocated to that. Finning, this is one of the few new securities in the portfolio. You probably know Finning International. They're the exclusive Caterpillar dealer since 1933. Exclusivity on a absolute critical manufacturer of heavy equipment. And the margins on these businesses are about 50% higher for the services of these heavy equipment businesses. The thinking here was it was attractively priced, pays a dividend, has a competitive advantage through its exclusive agreements with Caterpillar, and with tariffs in place, it's going to be harder to export these types of parts, materials. Prices are going up. And with margins 50% higher on the servicing side, it's more likely that these users of these equipment will be making sure that their current equipment lasts longer. Fantastic timing. You've seen the stock go from $36 up to about $51 here in a very short amount of time. We have our private credit strategy. It's an ETF that trades on the Toronto Stock Exchange. So it was trading at about a 15% discount to the net asset value. So the market, through the panic, said we don't think the loan portfolio is worth 100 cents on the dollar. Well, I can tell you what, we're watching that portfolio, and we didn't see the signs of stress in the underlying securities, and we bought those loans at 85 cents on the dollar. You'll see the same idea here, Vereen, a name known around town in the energy patch in the upstream. They recently were acquired by Whitecap, and so there was actually 2 very important catalysts there. They had a definitive agreement to be purchased by Whitecap, and at the same time, the market panic created an opportunity for us to keep on investing in that business. It was a previous holding, and we added to it. That type of optionality on April 7th really came to us through being well prepared for these types of opportunities in the market. Imagine you're running a business and you're not changing the portfolio. We'd been trimming, but you're not adding to the portfolio for 18 months. You're doing the fundamental analysis, you're doing the work, but you're waiting for the market to provide an opportunity. And this is really proof in the pudding. So, I'm excited that our team was able to identify that opportunity and act on it. Yeah, so I know it would have been a little bit difficult to see all the names in the portfolio, but these are the logos that you'll recognize and know. We try and go with best in breed in the market. And there's really nothing more to go through in the portfolio in the presentation here. I'm happy to share it with everyone. Like I said, I think the most important parts of that are really who we are, our team that we've built. You might know some of the gentlemen around town that I'm working with. If not, I'd be happy to introduce you to them, because we are a proud and capable team. And then, yeah, I mean, if you can interface with Shondell or reach out to me or Catherine, I'd be happy to, yeah, get together if you'd want to know more. But I wanted to bring up Richie one more time. Richie, can you share, because I think you tell it well, what gave you the confidence and, without putting your words in your mouth, we became friends, and we mentioned trust earlier, but it was I'm going to toot my horn here a little bit, through a lot of grit that we got to where we are today. There's a lot of barriers to entry, and there were some points where it was quite challenging, and we had to iterate, and we had to work to a point where it seemed like the light was quite a ways away. I can promise you the first 6 years were tough. The next 6 years are going to be a lot more fun. So Richie, if you can just come up and maybe share your story on, why you came with us. Of course.
All right, you're back to me. All right, so I've known Fred now 6, 7 years, and I will say to you that given the prominence of his family, some of the things that I've sort of seen, and I can't say too much about it, just the advantages that somebody that comes from that kind of background has. I have a tremendous amount of respect for Fred because when a man decides that he's going to strike out on his own, and Fred really did, when he reached out to me and said, I don't really want to rely on my family, my legacy, my name. I want to go out and make something for myself, in a really earnest way. It gave me a tremendous amount of respect for him. And it does harken back a little bit to my personal experience because my brother and I started from a student loan, and in gathering our clients, we're now up to we manage networks for over 600 companies here in Canada, and I could see that Fred had a similar kind of dream, starting maybe with a little more than what I had, but somebody that just wanted to take a little bit of risk, and I think that's really speaks to what people in Alberta are about, right? Like many people that I know, some people like Derek Hunter and his family, and people that have inspired me over time to sort of say, look, if you want something, the world is what we make of it. And it's up to us to really take some of the risks. Maybe some of these people from the other side of our country might be a little bit more reluctant to do, but we're mavericks out here. And Fred came to me and said, look, I want to make this investment and accelerate. Would you come along with me to take my first steps? And I could see there's a little bit of trepidation, a little bit of sort of unfamiliarity. And I said, absolutely, I'd love to do that with you. And so seeing how hard Fred works at his business, he's the first guy up in the morning making phone calls. He's the last guy in the evening, returning emails and other phone calls. And he doesn't have to do any of that. He has resources beyond, I'm sure, most of our dreams here in the room. And yet here he is today. And that's why I support him. So I'm the kind of person that, I don't make investments just because, we're buddies or anything like that. I do my own due diligence. I've been successful sort of in my own right by accumulating things and never selling them. And that's one of the reasons why, Fred's business proposition resonated with me, is because he does want to build something over the long term. And I think that he's getting there. He's alluded that, there's certainly been some ups and downs, but, that's all part of the game. And I think that's the reason why we're such good friends, is because even though we come from the opposite ends of the spectrum, I can say to you today that, I would trust him with everything that I have because he's such a gentleman. So. Mm-hmm.
What a good friend. I mean, honestly, what a good friend. So I know morning, there's lots to be done out there in the world today. Are we going to take some questions now, or if some people wanted to, exit stage left, don't be afraid to do that.
Somebody who's been able to figure out and make money taking a historically illiquid market and being able to find a way to make it liquid is a very, very unique skill. So I commend you at Accelerate and also at Standard Wealth for bringing that to the masses, because it is an important asset class, primarily because it's, for its diversification benefits. But anyways, the point of my question is, Richie, we did have a chance to get to know Richie a little bit. And when he says that his due diligence process is thorough, he means it. So this wasn't my friend asking me for money, I better give him any. This was, okay, I got to look at this, take a serious look at it and understand it. So you clearly got on board. Now, take me through some of the uncomfortable conversations, because obviously, Fred, you and I have talked about this. When you start a business, it's very rarely sparkles and rainbows. It's usually, oh shit, that happened again. Oh shit. Take me through some of those, because you guys have trusted relationship, you're good friends. How do you get through those? Oh, shit.
Yeah.
Okay. All right. Well, to be perfectly frank, like by the time Fred had sort of asked me to come in, so there's two components to it. So I'm an investor in the operating company, which is Accelerate itself. And when Fred had come to me, right around 2019, 2020, and said, I'm going to make this initial investment, he said, would you come in with me? One of the first things I thought, and, historically, my thought process has always been, what's the quality of the person that's leading this investment? And I had known Fred to be a true competitor. We know each other from the golf course. So, he's taken enough of my money that he's basically a payee on my payroll. So if there are people in the room that can help me with the tax deduction, that would be helpful. But I know he's really a competitor, and having played at the highest levels of polo, being the only Canadian to compete, in the Argentine Open, that kind of thing. I know that when things are tough, he had the grit to, try his hardest. And I wasn't sure if it was going to work. I wasn't particularly familiar about the business, but I did know through Fred that he wouldn't give up. And so, and he had said to me, one of the first questions I asked him as part of my due diligence was, are you putting your own money into this? It's not just investors. And he said, absolutely, and he really, again, I'm not going to say too much about it, but he really is all in on this. And so that gave me confidence to say that, no, he's putting his family, money at risk and his comfort at risk. And so that was the first part of it. The second part of it was the investment in sort of two funds. And so there's the arbitrage fund that I'm invested in and the income fund. And again, even though I'm an Asian guy, I'm not going to bore you with the math and all of that kind of thing. But I will say that, like I have personally some millions of dollars that I always keep in cash. And there's always a place to allocate some of those funds. And, during COVID and, in the time of low interest rates, the banks weren't returning funds. And so Fred had introduced to me, a couple of options, the income fund and firstly the ARB fund. And I'd asked tough questions. And I said, are you guys invested in this? Is it gated? What's the liquidity? How large is the position that you guys are holding? And obviously all those boxes got checked. That's all very straightforward. But those funds offered asymmetric returns relative to risk with the money that I'd put in. And that's really one of the reasons why I was a champion of it. And the more I was invested in it, the more I sort of had more confidence that alternative investments were going to be an important part of my portfolio. In terms of my own investing, I only have a 7 to 8 stock portfolio. It's very, very concentrated. And the rest of this cash, I have 2 positions aside from holding money market funds, and that would be in Accelerate funds. And now you see even the more sophisticated investors, the BlackRocks, the Apollos, Accelerate's actually very early to the game. And these ultra high net worth families, these very sophisticated institutional investors, like alternative investments is a cornerstone of their investing strategy now. So that's where I come from.
Thank you, Richie. And I think, when we hear and see these real world examples and you're actually able to, sit down and look at, your client statements that you receive, the alternative piece, I guarantee if you leave here and only remember one thing, this is going to be a trend that grows in importance quite dramatically over the years. And whether, it's the Accelerate portfolio solutions or other providers, they are working their way into your portfolios to help smooth the ride and generate a differentiated return stream within a diversified portfolio. So, proof's in the pudding here, and I appreciate the support, and I'm glad that we're working together.
In those, Fred, in those early meetings when you were, you're talking about the guys in Toronto, and I've had experience with that as well. How did you guys overcome, the barriers of, okay, no one's meeting, and this is a relatively new concept that we're bringing to the table. What did it walk us through a little bit of what did it take to overcome those obstacles, to get through, to get the meetings, and especially during that time, and just the challenges that you had to push through.
Yeah, so I remember very, very clearly it was like it was the beginning of May or like the end of April of that year, and kind of things were looking like, hey, we're not going to turn into zombies, and like we're going to have to keep on continuing on here. And we went through our Friday sales meeting, and we didn't have one sales call, not one meeting. And we all sat there, and some guys kicked around some ideas, and I stopped listening. I was just like, okay, wait a second, like we need a timeout here. We need a reset. And that weekend, I just thought there's got to be a way forward. So I went and on my LinkedIn profile, because we were trying to, I knew who these people are we were trying to meet with, but I wasn't sure how we were doing it. And, I just started there. I started on LinkedIn, and on Monday, I started picking up the phone, and, lots of no's, or I can't get together, or, it's not for us, or, it's too volatile out there. But we started the conversation, and it just took time to eventually say, hey, we spoke at the beginning of May. I know you're busy, but what's the calendar look like in July? For example, everyone's busy this week. You look at everyone's calendar, there's a lot of blue bubbles in there. But if I pick a time in July, probably there's some more availability. And since we're planning on doing this a long time, let's go to where it's easy. LinkedIn. I have access to your phone number, your email, your company website, and you gave it to me. And we know a lot of the same people. I haven't bumped into you yet, but I know a lot of the same people around town. We should get together. So the tonality and the total mantra of like, we need to sell went from like, no, we just need to get together. And then once we get together, we'll see if there's a fit. And I think once we started understanding that, the questions weren't, you should buy this and why you're not buying it. It was like, wait a second, just tell me what you're doing and the problems you're trying to solve. And you're going to hear, from our target market investment advisors, well, we're middle of the fairway. We like to pick, 25 to 40 stocks. We buy a PIMCO bond ETF because the bond market's highly competitive. And alternatives, we use third-party external advisors. That's exactly what we do. But we were asking all the wrong questions at the start. We didn't even know. And people were putting up the sales resistance because we were talking about ourselves. So the whole mantra changed. And luckily, our arbitrage fund really caught a spark because the IPO markets were closed for much of 2020. And the SPAC market, a lot of companies went public through a SPAC. And we happened to play in that arbitrage space. So we had tremendous success. We had, I think, for like 5 or 6 weeks in a row, the #1 fund out there in Canada. And there's nothing like being #1 to help bang the drum. So we're a little bit lucky on the timing with the right strategy at the right time. But I'll never forget that sales meeting because I was like, we're toast unless this changes. And yeah, I mean, a lot of YouTube videos. If you're on Instagram, I'd say, follow the people that inspire you, that, are industry leaders, and, continuous education. I mean, even today, I'm like iterating, every day. When I see things that are working in the market or people who are being successful in the market, I'm taking pages out of their books.
Yeah, just quickly, just one recommendation would be Julian, who's the co-founder and CIO.
Yes, Julian Kamachko. He's an amazing guy.
A lot of stuff on LinkedIn to help you understand not just what you guys are doing, but what's going on in the market.
Yeah, an absolute advocate for alternatives. So in Canada, we have the Canadian Alternative Investment Association and the Alternative Investment Management Association. We're members of both. Lots of education around that, conferences all around Canada. Those two organizations are going to grow in importance for the reasons we previously discussed. And so Julian's been a champion there. If you're interested to know more, I'd say he is absolutely an expert around alternatives. It's not salesy content. It's very much educational and facts-based. So I enjoy it, but I'm biased. I'm living and dreaming it every day.
So congratulations on all the success through the years. I've seen from the beginning and how you've grown with the team, and the amount of grit and, the team has, because it's very competitive out there, right, in the alt space. And when we manage 1.8 billion, and we have, our pure protection-based investments. But then when we look at alt to give that growth, we get a lot of different funds that are coming to us. It's very competitive, right? So when we see that, we do an analysis of these different funds and groups that come in. One thing that we look at is the longevity. So, again, congrats, 5 years. But when we're looking, it's like the track record of, 10 plus years, and they're large, they're international, as well. So how do you compete with your competitors on that scale when it comes to the longevity and reputation?
Yeah, I mean, there's no doubt about it. We're up against some of the, biggest and brightest institutions on the planet. Easy to allocate to BlackRock. They got a storied history. They have, some very great strategies there. I mean, excellent people. So we try and differentiate ourselves in, niche markets. The alternative space, not a lot of people have a 5-year track record at the ETF level, because we actually pioneered the structure. And it's, without going too much into the details, think RBC, if they have the custody relationship of some of the assets and then you want to borrow against some of them, because our strategies are utilizing options, leverage, derivatives inside of them. That's a complex Chinese wall to kind of break through at these large financial institutions. So we actually had the first alternative ETF here in Canada. So when you talk about track record, we have something unique. Something that maybe doesn't matter too much today, but the first one to hit their 10-year track record with an ETF, I can promise you we'll be having a party. So everybody invited, and Chantal is absolutely correct. These what I'll call due diligence hurdles are in place to protect investors, protect management, and we know that we have to satisfy those requirements. We can't make the clock go quicker, but we can, through our diligence and our efforts, make sure that when we get to those milestones, we're ready to at least have those types of conversations. So, I'm very optimistic. Not easy to get going. When you first start out, like, let's go back to May and June of 2020. I think we were managing like 5 million in assets. Chantal's team's got 1.8 billion. A 1% allocation there is 18 million. That doesn't really even move the needle in their portfolio, but think about what that would have done for us. So, how I'd approach that is say, like, well, just put like a couple million, and they'd be like, no, just put a few 100,000. No. I'm like, just put 1,000 of your own money and watch it. Add it to your watch list at least. So when I see you around town, we can be a known entity. You understand who we are and what we do. Do you like what we do? Where are the pain points? Like, would this actually be something you could use? So it's taken a while to get there, but I can tell you we're well on the way, and the prize is large. I mean, Canada's a very wealthy nation. There's a lot of equity that's been built up over the years here, especially in this town, Calgary. And I feel like we have a great foundation and great base. Pressure's on to keep it going.
Hi, Fred. I don't really have a question so much as just a commentary. I've known Fred a very long time, since he was a young person. First, he's still a young person. Anyway, I just wanted congratulations, first and foremost. I've seen you a long time, especially on the polo field, and I would just suggest that you're exemplary in your effort and your grit in what you've done, coming from the situation that you have. You've been not just a top player in the world, and the strategy and organization that it's taken to do that, I see you transferring to what you're doing now. But you're also an anomaly, because a lot of the people who have the opportunity that you have never rose to the same level of player, and that's testament to your discipline and dedication. So it's exciting to see what you've done, and congratulations on the 5 years.
Oh, thanks, Anne.
Well, she just did the thank you for me. Yeah, we can take one more. Sure, Stan. This is the last question.
Thank you. No pressure being the last question. Very clear, and thank you for a great presentation that you and your team are all about due diligence and pattern recognition. So when you look at everything that's happening in the world right now, particularly AI, where do you see the puck going, and how does that affect your investment thesis?
Well, let's get ready for the AI revolution. There's no doubt that it's coming, and all of us are going to be affected by it. And if you don't believe me, I would suggest you download ChatGPT. It's free, and start asking it questions. You will be absolutely amazed what you're going to find. I'll give you a good example. I have a lady who's into crisis management that I met down in Palm Beach, and she's had a very successful practice for 30 years. She's an industry leading veteran in the space. And she's obviously, an independent contractor and making it her own way. She's got some support people behind her, but one of the things she wanted to do was make some of her contracts a little bit more rigid and less, we'll call it a handshake deal. And so I said, oh, that's easy. And we left. And by the time I was leaving the parking lot, I had sent her a 2-pager with all the legal language around, hey, we're in the state of Florida. Here are the terms of the deal. Here's the commission structure. Here's how you get paid. Here's where the performance metrics are going to land. And she goes, how did you have this on file? I said, Cheryl, there's no file anymore. It is literally in the palm of your hand. So I see that, and I am not even on the curve at all of AI. And you're going to talk to some people who are way up the curve. I have my eyes and ears open for them because I don't even know how I can utilize it, but I know I can. So the AI space, particularly when we talk about standard wealth, it's in the infrastructure players. That'll be way lower down the risk curve when people need to raise capital or borrow. Probably it's, in the data center space. So I'm going to be following that, and I am following that. But I think all of us need to really get ready for that because there's no way it's not coming.
Awesome. Thanks, Richie and Fred, for coming and spending some time with us. There was a couple things that resonated. I just flew back from Toronto, and I was meeting with a client there who your conversation is there in the real estate raising funds and trying to have conversations in Toronto. He literally said, tell me your next one so I can fly to Calgary for these because they don't have this type of thing of sharing knowledge. So I really appreciate your generosity of sharing knowledge and what you've done and how you've gone through. And for both of you, we've got a card here and Catherine's lovely butter tarts and have made a donation for both for you, Fred, to Kids Sport. So thank you very much. And Richie to the Adult Literacy at Calgary Foundation. We appreciate your guys' time for coming to share your knowledge with our people and look forward to talking again soon. Fred and I have seen each other a lot. We've now circled the breakfast, lunch, dinner phase, so we're good. Good.